Hello, fellow investors. Today, I would like to tackle the second most valuable company in the US with market capitalization of 2.5 trillion, joining an exclusive club that includes Apple and Google's parent Alphabet. I'm talking of none other than Microsoft Corporation, which transformed from an operating system company to a cloud computing company. The stock has grown rapidly by 50.58% in 2021, and if it reaches 400 in 6 months or less from 327 as of December 14, investors will pocket a handsome yield of about 22.3% in a short period of time. For me, Microsoft is a strong buy amidst the expected approval by the EU antitrust regulators regarding the company's acquisition of Nuance Corporation, which will strengthen its foothold in the healthcare market. But before we proceed, please subscribe, like, and share this video to help grow our channel. Without out of the way, let's start to break down this stock. This slide is Microsoft's 5-year stock chart. The stock yielded a whopping 244% from 2019 to December 2021. It was at the start of 2019 that growth began to accelerate due to strength in the cloud computing business despite challenges brought about by the pandemic. Now this slide is a 10-month chart of Microsoft. As can be gleaned from the chart, the trend is up and range bound from February to late October. On October 27, the stock has broken out and formed a new uptrend channel. The former resistance became the new support. Today, when the market closed on December 14, the closing price of 328 is sitting at the support level. It tried to breach the support intraday, but failed and moved back to the support level. This indicates that it has not violated, as of yet, the second uptrend channel and therefore remained bullish. However, the MACD is diverging from the signal line and may indicate that the stock may become bearish. Considering the market is volatile because of the anticipated policy direction from the Fed, which will come out tomorrow, the market may still drop further within the week. With this in mind, we have identified 3 buy points based on the chart, namely $306.43, which is a 100-day simple moving average. Second, 285.25, which is close to 200-day simple moving average. And finally, 348.04, which is the resistance. Later, I will show you the risk return of each buy points. The bullish trend of the stock chart may continue especially during the strongest season of the market, which is November to January, because of the company's high growth potential across all product lines. On the intelligent cloud segment, the usage of cloud has been growing exponentially. The company's Azure is being used by more than 95% of the Fortune 500 companies. This trend will continue as more businesses will shift to cloud computing for better data management and analytics. What's even more attractive is Azure has a price advantage over Amazon's web service by over 5 times. On the productivity and business process segment, the company, with its Dynamic 365 product, is building a new generation of business applications to digitalize their end-to-end operations from sales and customer service to supply chain management. Microsoft 365 for business and consumers has a subscriber base of 52 million. According to an analyst, only 30% of Microsoft's enterprise install base has shifted to the cloud. This provides a huge market potential for the issuer. The acquisition of Nuance Communication will provide clinical intelligence capabilities to strengthen its foothold in the healthcare organization. LinkedIn is now a leader in B2B advertising, professional hiring, corporate learning, and sales intelligence. It has more than 774 million members. Its Teams services, the all-in-one solution that supports meetings, calls, chats, among others, has more than 250 million users. And finally, on the personal computing segment, gaming revenues are expected to even move higher as Microsoft is leading the way in a fast-growing, huge cloud gaming market. Search advertising has improved significantly as of late, driven by higher revenue per search and search volume. What is more exciting is Microsoft will actively play in the metaverse, a new infrastructure layer made possible through convergence of the digital and physical world moving forward. Putting it all together, Microsoft is well positioned to propel its growth in 2022 and beyond as its products and services have shown strong demand because of the company's continuous innovation and expansion in terms of more corporate acquisition to strengthen its market share in the cloud, operating system, social media, gaming, and advertising market. Microsoft's fundamentals are impressive and very strong. Revenues have been surging for the last 3 years under review with simple revenue growth of 15%. The company is performing on a high operating margin of 41.6%. That makes the company highly profitable as well. It has a healthy cash posture with free cash flow of 49.82 billion as of end fiscal year 2021 ending in June. Debt to equity ratio is manageable at 0.52:1. Forward price earning ratio is higher versus benchmark as investors have factored a strong future growth potential for all its product lines. And finally, it is generous to reward its stockholders with payout ratio of 25.6%. The following are the risk factors. First, stiff competition. Microsoft is faced with a dozen of big competitors in the cloud market. Its market share is approximately 20% of the global cloud market in 2020, trailing Amazon's 41%. Microsoft is not stopping to improve its technology and its cloud business. In fact, most of its products are transformed into cloud, like Microsoft 365, gaming, social media, and even connectivity. Second, security. Security is one of the most important criteria to be considered by an enterprise before shifting to cloud. Microsoft will invest $20 billion over the next 5 years to advanced security solutions. Last, market condition. At the moment, the market is highly volatile because of inflation and COVID. The market is watching the policy move of the Federal Reserve with regards to interest rate and tapering. So now we have seen the bullish stock chart, the solid growth prospect, and the strong fundamentals, which are the three main pillars to go along on this stock. Earlier, we have identified three entry points for a profitable trade, as shown below. The three levels are: first, 306.43 is the same as the 100-day simple moving average. Target price is 368.23. Stop loss is 285.25, giving you a risk-reward ratio of 1:3. Should the price reach $400 per share, return will be 30.54%. Second buy level, 285.25, same as the 200-day simple moving average. Target price is 368.23. Stop loss is 269.55. Risk-reward ratio is 1:4. Again, should the price reach $400 per share, your return will be 40.23. Last buy level is 348.04, same as the resistance level. Price will be 400. Stop loss is 319.24. Risk-reward ratio 1:2. Return is 14.93%. The figures are very encouraging, but investors should be vigilant before diving in and buy the stock. One should still make further due diligence because a black swan may just emerge that could change everything overnight. In closing, I would like to give you a famous quote from a legendary investor that made a great impact on me as an investor. Courage taught me no matter how bad a crisis gets, any sound investment will eventually pay off. By Carlos Slim Helou. Thank you for listening, and see you again next week for another stock feature.